Hello and welcome to this Monday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Andrew Cox with us with a shipper update, but first we're going to go to Zach Strickland with carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to this Monday Carrier Update presented by PowerFleet. I'm Zach Strickland, and today we're going to start watching these volumes take a little bit of a sideways journey over the weekend, as we traditionally see over the weekends. A little bit of a stalling out period here as volumes, of course, quickly recovered out of their trough from the Memorial Day holiday. Actually, didn't really fall near as far as they would have around this trough that we saw down here around the middle of April when we saw the bottom of the COVID-19 outbreak impact to the freight market. Recovered as quick as you can imagine, jumping up last week all the way to Friday, and then we take a horizontal journey just to the right there. So volumes did stall out a little bit over the weekend. Again, not necessarily a bad sign, but we do expect here, once that 7-day moving average clears tomorrow, we should see a pretty dramatic increase in tender volumes here over the next 2 days or so. That being said, tender rejection rates, however, again, took a little bit of a horizontal journey over the weekend, but again, 5%, a pretty decent tender rejection rate from what we've traditionally seen here over the last year or so. We've crawled out of the hole, at least for now, to see whether or not that pace is going to continue throughout the month or not. We're going to have to wait and see, but for now, everything stabilized over the last few days. We've been seeing a real interesting pattern emerge during this COVID-19 outbreak, and that's the fact that a lot of Fridays have been a lot softer than normal. We haven't seen the volumes really push on Friday. Slow Mondays, slow Fridays, really compressing a lot of the activity to the middle part of the week, which is not unheard of or not necessarily new, but it's compressing it even more. So we're seeing a very strong pattern on Wednesday, Thursday for our tender activity. Looking out over the rest of the country, the weighted rejection index, again, combination of market share and weekly change in tender rejection rates, going to show you the most relevant markets to where capacity is either tightening or loosening. The list here in red and green over here is going to be sorted from the highest weighted rejection index to the not necessarily the lowest, because I don't have enough room on the chart, but 9.2 in Atlanta, Georgia, leading the way. We talked about Atlanta last week having one of the strongest increases in tender rejection rates and volumes strong out of the Atlanta market. The weighted rejection index has fallen a little bit, though, over the weekend, indicating that we may see some stabilization in Atlanta here over the last little bit, just a day or two. Ontario, California, again, the two largest markets in the United States. Doesn't take a lot of tender rejection rate change to move this index. But Denver here in green and St. Louis also in green. Big difference between the two. Denver 8.7, St. Louis 3.8. Again, let's break down these markets, see what we're talking about here. Here's the St. Louis market sitting out in the middle of the country, a big gateway to the west, a big thoroughfare for freight to move in and out of. Some hubs positioned in the St. Louis area, coming out of Kansas City up to Chicago, etc. A lot of freight movement in this market. Volume's taken a pretty big jump up. Again, we're not necessarily where we would normally be in this market, but the fact that the trend line is a lot higher. You've got tender rejection rates jumping all the way up to 5.86% here in the last week or so. So we're changing the pattern here. That's the point of this, is that we're not necessarily blowing apart with spot market rates and volumes in that course, but we are moving in a higher direction in both volumes and tender rejection rates, so definitely at a faster pace than a lot of the markets in the United States right now. So definitely pay attention to the St. Louis market this week. A lot of these volumes along tweener and mid-haul, all leading the way in terms of a lot. That means you're going to get a lot more miles out of this market than you would, say, a Newark or a, more of those northeastern markets. The Denver market has been one of the more interesting markets this year, having a pretty strong February. We had a ton of snowstorms, a lot of activity there, disrupting a lot of freight patterns, and now volumes, again, you can see here on the outbound tender volume index in the blue, trending much higher. Tender rejection rates continue to outpace 15.5% in the Denver market. So this is one of those markets that you may want to pay attention to for any spot market activity and keep those rates elevated. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. I'm Luke Falasca bringing you another broker update, and I hope you all had a good weekend. And it is the 1st of June as we really head in here. Hopefully, things continue to move up as they have been doing. Right now, we're looking at volume levels. They've kind of remained flat over the weekend. Not much change since we bumped off of the Memorial Day dip a little bit. Hopefully, that does continue to rise up. Time will tell. But notice in blue, volume levels. We've mostly recovered from the dip there Memorial Day. They seem to be settling down a little bit. We'll see where they end up here over the next week, if they continue to go up or hang out steady. Now, tender rejections, on the other hand, have continued to push higher. We're sitting right at that 5% mark. That's that orange line there. As that number continues to go up, you'll start to see capacity tighten and spot market rates will rise along with it as shippers have to dive in a little deeper to their routing guides. That's where we're going to keep an eye on, and we'll look at the areas of most opportunity. But first, we have a new top dog in terms of truckload volumes. Ontario, California right here is now leading the pack in terms of outbound market share. 4.5% of the nation's 4.54% of the nation's outbound freight is going out of Ontario, compared with just 4.50 out of Atlanta, which had been our top dog for a while. So Atlanta volumes have fallen and Ontario volumes have risen, and because of that, Ontario has taken over. And as far as some of these other major markets here, Harrisburg is down 6.7%, but Dallas is up. Elizabeth, New Jersey, and Houston are all down. So of the 6 major markets, only 2 of them are up. So we'll see where that continues. But for right now, Ontario is on top. Now, let's go ahead and look here at the outbound tender volume weekly change here on the map. For the most part, no real extreme movements apart from some of the middle, kind of mountain areas of the United States. But for the most part, the coastal areas here have been relatively stable. Remember, the areas in blue are where volume levels are increasing the most. The areas in red are where they are decreasing the most, and the white would be relatively unchanged. That being said, if you're looking for some areas to call to find some extra freight today, you definitely have the mountain region here, although that is not usually a ton of volume. It is increasing, but again, still a small area. There is some areas of opportunity here along the border of Texas, El Paso, Laredo, a lot of that cross-border freight. Las Vegas seems to be having some big movements, but also it looks like we're seeing a lot of movement in Michigan as things continue to come back online, potentially for the auto manufacturers. So as that continues to surge, you'll start to see more and more opportunities float out of there. So potentially a good opportunity for those of you that do haul for the auto manufacturers. Should be some good signs coming. Now, we're going to go ahead and look at the Ontario market today. Again, that is our #1 market by market share as of right now. So the blue line here is going to be volumes, right? We surged up, then we had a Memorial Day dip, and then we've come right back up. So freight volumes out of Ontario have recovered almost immediately compared with the national average. We're still sort of recovering from that Memorial Day dip. Now, that green line that's there, that is going to be the outbound tender rejection index, and we are sitting very high right now, right? Almost 8%, 7.63%, so that continues to go higher and higher. That's the highest that we've seen out of Ontario year to date, apart from the coronavirus surge that we saw there in March. So if you're moving freight out of Ontario, this is a perfect opportunity to continue to increase your spot market rates on your shippers. That you now have the ability to do it. Carriers will ask for a premium since rejections are going higher, but also there's more volume to move. So make sure you're calling all of your customers on Ontario today. They should have more freight to move, and with rejections going up, that is going to tighten capacity for them. If you don't have any customers in Ontario, I would start calling today, especially since rejections are up and rates are going to be moving up. Shippers will be looking for more capacity to help them out today. I'm Luke, and that will do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hello and welcome to your shipper update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, today I've got a couple different data sets that intertwine pretty well together. We'll talk about the read-throughs to not only the full economy, but to the freight market. So the first one is our personal income. This is from April. It jumped 10.5%. And really the only read-through here is that this number is being propped up by the U.S. government. These are direct payments and transfers from the government to people's wallets. This is why that number has jumped. But if we look at the consumer spending and also retail spending, these are two different data sets, but total consumer spending down 13.6% and retail spending down 16.4% in April. These are just both in line with that Bank of America data that I've been talking about every week. We've seen consumer spending be down. But the real number that I want to talk about here is that, we see personal income rising and we see spending falling, and this has caused our savings rate to jump. And when I say jump, I mean really jump. April's now at 33% savings rate. This is much higher than any other data set. This is back, or any other year. This is back to 1959. This is about 3 times what it was in March. And basically the read-throughs from that, I got 3. The first one is that consumers may be able to spend more money when they feel comfortable to do so, when they can go out into all their bars and restaurants. They're now beginning to open, but they may be just waiting to feel completely safe to do so. The second one is the people that have lost their job but have been paid by the government now for the last few months, they are being very cautious about their spendings. They've spent just enough to cover their bills and keep them afloat. And I guess the last one there is that the government has been able to keep the economy afloat, has been able to keep people able to pay their bills. But if we really want a recovery and we want this kind of V-shaped pickup that we're all hoping for, we're really going to need consumer spending to pick back up here. And I'm worried that it might not once those monies run out at the end of July.
And Andrew, one of the things that you kind of talked to here is how important that sentiment is for the consumers, right? So it doesn't really matter if you have that income or not, if it's being replenished, if you can pay those bills, and if you have a little bit extra. If you're not confident about your current situation or the outlook, you're simply not going to be spending on your favorite retail outlets and online spending and things like that. Yeah,
precisely. And luckily, we did see consumer spending looks to be finding a bottom here. The expectations index for 6 months out actually grew in May, so we're thinking that people are expecting things to be better here a few months out. So yeah, I'm thinking that consumer spending may be finding a bottom here, but again, it's all being propped up by those payments. So I'm really just looking forward to that July date, see if we can keep that savings rate up, maybe people can kind of smooth out their trajectory back into the workforce and be able to find a job there in the fourth quarter, and then we have kind of a smooth recovery. But again, there's just a lot of uncertainty at play here.
All right, and one of the things you just mentioned, these are the April numbers, and so April, as we all know, is one of the worst statistical numbers that we've seen in almost every single macroeconomic outlook, this included. So I think many are expecting, of course, maybe this is going, like you said, find its bottom in April as we start to see more and more countries, or more countries and states open up. I think I'm starting to hear talks of larger metropolitan areas, places in New York, Florida, starting to reopen their doors, and so that should definitely kind of spur some activity here.
Yeah, that's my hope. I mean, the Bank of America data is a little bit more in tune with the time. We get it closer to the date. I think we've got the data up to the end of last week, and that data has kind of hit a plateau about -10, -15%, but it is up on top of from April. So I do think it has bottomed. I think consumer spending and sentiment is up, and it will move forward. Again, this is barring a case outbreak again. I'm hoping that there's not one. There was a lot of people out this weekend, but we'll see. My hope is things are good. We're looking up. I think this is going to be good for freight volumes. We've seen things pushing. OTVI is now likely going to be back above 10,000 by the end of the week when we get over that 7-day lag from Memorial Day holiday. So things are looking up.
Excellent, Andrew. Thank you so much. We appreciate it, and thank you so much for tuning in. That's going to do it for the shipper update, and that's also going to do for this edition of FreightWaves Now. But as you know, the content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves TV app and all your favorite streaming platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.